Welcome to Internet Capital Markets, the weekly show where we explore how financial systems are being rebuilt on the web. Each week, we sit down with the builders, investors, and institutional leaders who are shaping this transformation from tokenized assets, decentralized finance, and not to forget, fun projects. Today's show is brought to you by TrustByte, Smart Treasury for Internet Capital Markets. I'm Jeremy Pazetio, and together with my co-host and co-founder Jonas Zurman, we are builders ourselves.
GM, everybody. So welcome back. The second show already this week. So we are really excited, and I believe we are truly going international. So the last time we had Quicks joining from Thailand, actually, and today we are joined by Felipe, the CEO and co-founder of Defunds Finance, and they are building a platform bringing hedge fund management on chain. And he has over 15 years of experience in data analysis, automation, quantitative investing, and he's also a portfolio manager in Brazil. So he is building automated investment systems on Python or in Python and Rust, works to unite traditional finance with Web3 transparency to create a decentralized and data-driven strategy here. And with Defunds Finance, he's leading the shift towards on-chain hedge fund management and basically enabling the hedge fund management in an open and decentralized permissionless manner. So welcome, Felipe, from Brazil. And like I said, we are truly going international. How are you doing?
Hello, I'm very good. I'm happy to be here to participate on Internet Capital Markets show. So let's share about our thoughts and why we are building the start of the Internet Capital Markets.
Super. Let's do it.
Right.
Yeah, maybe to kick it off, for anyone who is not familiar with you, tell us a little bit more about yourself, about Defunds Finance, and why you actually decide to launch Defunds Finance.
First, I will start. I'm an engineer in Brazil. So as you just told, I work on TradeFi since 2017. But I'm a Solana Maxi, Super Team Brazil member. And what includes of the biggest Solana goals that is bringing Nasdaq on chain, I think Defunds fits perfectly inside this goal. As if you wanna bring Nasdaq, who we should bring? Managers.
I think I can definitely agree here. There's a shift happening, and similar to what we are currently achieving already with retail and consumers. There's definitely a gap to be closed, so that the traditional portfolio managers and investment managers, asset management can also interact with DeFi and on-chain investing, right? So we got to know each other actually because we are both participating in the Colosseum hackathon at the moment. So we participate with TrustByte. You're participating in Brazil with Defunds Finance. And what is actually your goal by participating in the Colosseum hackathon? And why did you decide to give it a go?
I think the hackathon is one of the biggest opportunities we have on Web3. It's our chance to become now to the world. And if we win or get mentioned, it's a green light for VCs to look into our company to invest in it. We saw Camino 3 years ago. They started literally from scratch to over 3 billion TVL nowadays. And they started in hackathon.
Great. And one question, how does Defunds fit into Solana's broader vision of building the Internet Capital Markets?
Solana is building the technology to bring Nasdaq on chain, and Defunds Finance will be the first DeFi protocol with their main goal is to bring or to bridge Web2 managers on chain. I have never seen any protocol that aiming on Web2 managers.
Yeah, fully agree. And I would like also to go into the technical aspect here. Is there anything specific from a technical point of view or other ecosystem advantages that made it
Yes.
the right fit for you, so you chose Solana as the execution layer here?
Yes. Nowadays, we don't have the technology to bring Nasdaq on chain, but we are tracking close what Enza is doing on Apple Glow with some deep chains on how Solana works nowadays. So it will make a chain from proof of history to proof of stake and bring latency under 150 milliseconds. So Solana will be able to compete in Web2 infrastructure that will allow the blockchain technology to compete in new categories. So there's no other choice besides Solana.
Yeah, I think that's like the reasoning for many projects actually building on Solana. The true speed of like execution, especially when we are talking about like higher, let's call it higher frequency trading here. But I also had a look at your white paper, and you are essentially claiming that you want to bring together or bridge traditional hedge funds with like on-chain transparency. Can you maybe elaborate on that, and like how does it actually work to bridge those two worlds?
Yes, DeFi is hard, so we need to embark people. But how can we do that? When we talk to bridge, is to create the same experience, the same common experience investors have. So they are used to do on their banks or brokers, but now everything can be auditable, and the best part is their money will always stay in their own custody. They can withdraw it anytime, even on Sundays when banks are closed.
Yeah, totally agree here. And I feel like the hedge funds, and especially the entire industry there, they were like kind of like the front runners in finance, right? They always like thought about like new investment opportunities, creative approaches. You have different strategies here, delta neutral or like just pure macro in investing. So I feel like bringing DeFi into the play here is like really bridging the gap here a little bit, and it seems to be like the single missing piece here, so that they can truly trade like 24/7. But you also mentioned that especially copy trading doesn't work anymore. Can you break it down? Like, why do you state that copy trading doesn't work anymore? And if you look at the current way how they do it, or the current way of copy trading, like what kind of like architecture are you using here to fix that problem?
Copy trading has a big problem on calls using their user as exit liquidity. So we bring a new way for users to trade. So if you know a profitable trader, he can trade your funds using our vault. But it's when a manager creates one vault, he chooses to receive a performance fee for his skills. So if he's profitable, he will receive his part of our users that are inside the vault. And manager will never have access to investor funds due to our use of some technical PDAs plus CPI calls with Jupiter Exchange. So managers can only buy and sell vault tokens, and vault value increase and decrease equally for every user. There's no spread between users. Everyone wins or loses the same percentage on trades. And that's changed everything, because KOLs now, they are winning on exit liquidity of their followers.
Good. So let's say a little bit with copy trading, because it's actually a larger market on Solana itself, multi-billion-dollar I think last time I looked it up, it was like $25 billion as a market itself. So I'm curious, what's your plan to convert users from followers to vault participants here?
Cop trading volume monthly on Solana is near $26 billion. So it's an insane volume. But from this volume, 80% of cop traders lose. That's because of spreads. I don't think influences will like Defunds in the beginning, as their exit liquidity squads will end. But when users start selecting profitable managers and profitable traders inside the funds that can really deliver results over time, it will bring some noise on chain, and cop trading volume will start migrating faster to the funds.
Mm-hmm. Okay, so you said 80% are losing.
80% of cop trades lose.
So can you maybe walk us through how the strategy vault actually operates from a user perspective, and how, if an investor deposits to trade execution, where Defunds is actually adding value in that flow?
Yes, I will have to go a little more technical in this answer. So we provide a solution where a manager can sign for the vault, but he can only trade in user Jupyter CPI. So we invoke Jupyter inside our program, and in the same text, in the same transaction, we gives and revokes his permission to perform it. So there is no open permission for his wallets to trade the funds, as transactions goes atomic, and everything happens or cancels. So while PDAs are addresses with no private keys, we lock his permissions inside smart contract. So investors cannot trade, but they can withdraw. And if there are positions open also, then the smart contracts itself triggers close and close the percentage of all trades he manager has open, and transfers the users his part.
Got it. Thank you for walking through it. Maybe we can attach a visual to the show notes later on.
Yeah, I think that would be great. And I do believe that you shared it last time on X, when I remember correctly. So maybe we can put that in the show notes again, because I do believe like there's quite a bit under the hood. So it's not like that straightforward. But if we are now looking at like on-chain asset management, like in general, and I mean, probably your claim is that you want to revolutionize like on-chain asset management and bring it like to traditional finance with Defunds Finance. What do you think is like the missing piece here for asset managers, and why do you think that they will use and take advantage of your platform here? Like why can't they just use like just their own wallet and then interact just with DeFi protocol, for example, on Solana?
I think the asset management is even further than that. I think the bigger part of managers just think all they need is on Nasdaq. But I think with education, we can bring them to use on-chain asset management. Capital is flowing hard to crypto. It's impossible to ignore it.
So you really think that the missing piece here is like the educational factor? So they just need to learn how like DeFi and crypto works. Is that essentially what you're saying?
I didn't hear your question.
Sorry. Like what I got from your answer here is that you do believe that like the educational factor for traditional asset managers is like the missing piece here.
Yes, of course.
Gotcha.
I think education is the path.
Yeah, I mean, that's like definitely like one essential pillar here. That's for sure. And if you're now looking into the strategies that they can choose on your platform, what I've read also in the white paper is that you in the beginning offer two essential different strategies here. So on the one hand side, you have the DeFi strategy or the DeFi strategy vaults, and then also the RWA credit pools. Can you maybe explain these two strategies in greater detail and what is the difference here? And
Yes.
what kind of protocols are under the hood and where actually the yield is coming from?
Yes. First, we left the Euro assets credit pools to first quarter 26, as implementing it would be a little hard, but I will pass through that. I will first talk about the 5 outs, and I think it changed everything. And I can't believe that no one has done it before, as it just brings what people are used to do on their normal life besides crypto. It's simple like that. Investing in people instead of products. And going to the credit pools, Euro assets credit pools does not need to be full collateralized. It doesn't make any sense. Nowadays, major protocols gives options with over collateralized lending opportunities, but it doesn't make sense because in our opinion, we can provide a reputation system based on wallets and people that can rule that besides collateralization.
I'm curious. Let's dig a little bit deeper into the second strategy, so the RWA credit pools. And with that, I understand you want to enable under collateralized loans,
Yes.
which is kind of extremely hard to do it on chain. It's kind of a challenge that is not solved today. So how do you think you can solve that, and why?
I think it will be solved exactly like the biggest marketplace done with vendors. Huge reputation system. So it's all about people, not about collateralization. People are our product, and our product it's made for people. So if one user has a good reputation on the system, people will lend him money charging less API. So how do we start with their system, their reputation? It's not start from zero. So they will share everything they have done for why they are asking for capital, all their socials, all their path, all their work, their resume. So they will share all their story, and that will create one opportunity for people to invest in. And people will see every time he paid or did not pay for his obligations inside the funds.
Yeah, it's actually good to take you a bit on people itself. So let's switch gears a little bit. We talked about the two strategies, and let's look a little bit ahead. How does your launch and roadmap actually look like, and what else is going to come? What you're planning to offer?
So this quarter, we're delivering the shared vaults with one delegated manager, starting with on-chain traders, and after it, we will start to embark some Web2 names. And for the next quarter, we will start our audits, and after it, implementing WA pools.
Sounds exciting.
Yes, cool. No, I'm really keen to give it a shot myself. So really excited about what we're Yeah, and let us know. I think can you already use and test for everyone out there?
I'm really excited about having an opportunity to really change how investments are made around the world, taking the centralization out of banks' hands and letting people order own money.
No, I mean, sorry about that. Maybe
No.
you misunderstood the question. Like, is it like already possible to use the platform? Like, if I want to test it out.
Yeah. Yes. Of course. The platform is fully working, as we do not have audits before. We just as I think it's good. Well, we had a cap for users, so we limited it to 0.05. So it's literally to use and test it. We had 52. I think it was 52 testers on DevNet that gave us feedback about the improvements, and now we are on mainnet. We have 5 testers already. We launched 2 days ago, so it's fully working. You can try.
Cool. Congratulations. Yeah. I don't know if you have seen it, but like the Colosseum team, they are also supporting with like security audits. There are like definitely options for like young projects to get some credits from security firms for the first audits. But yeah, maybe moving on here. Our show is called Internet Capital Markets, and this is like widely used in the Solana ecosystem. And essentially, the idea of the capital market activities like issuance, trading, custody, RWAs, swaps, whatever, is like to move everything on chain here, right? And like what I was like asking myself is like, how does Defunds Finance fit in here? So is your goal like to move like asset management completely on chain, or will there be like a off chain part as well?
I think the funds here to embark the Web2 managers, it's ready. So we are totally aligned with Solana's goal. We are literally on the same path.
All right. Let's have some fun and let's do a quick fire. I will give you one question and you have one word each to answer. And we repeat that a few times. So are you ready?
Yes.
All right. Okay. So the most underestimated thing in trading today?
Transparency.
The most overhyped concept in decentralized investing right now?
Huge aggregation.
A recent development in the Solana ecosystem that excites you the most?
Alpengolo.
One word to describe the future of decentralized fund management?
Composable.
A book or thinker or framework that most shaped your view on merging TradFi with DeFi?
I would say Jupiter Actions.
One word to describe the future of internet capital markets?
Solana.
One misconception about lending you wish would disappear?
Collateralization.
If funding and regulation were no constraint, what would you build tomorrow?
A world exchange with all assets with IPOs. One word.
A recent move in the Solana ecosystem everyone should watch?
I will repeat the other question. Alpengolo.
Okay. And one sentence. How will capital markets look by 2030?
transparent, and on-chain.
All right, that's the quickfire.
Yeah, I think you nailed it here. So, I mean, that's what we are all working for, fully on-chain capital markets. And we believe like there are like promising signs that we will achieve that. Maybe not like fully in 2030, but like at least like more and more percentages of the traditional financial market will definitely move on-chain. Last but not least, like how do people find you? Where can they learn more about you, about Defunds Finance, and like who should we talk to next in or on our show here?
First, to read me, you can go to my X at BLC Head. When I created it was to mean blockchain head, but it never got into people's mind. So it's BLC Head. I think, and you can go to Defunds Finance X also. And I think if you can bring people from Jupiter Exchange here or Meteora, would be very nice. They are the guys building, making this possible.
Yeah, they never stop building. So like there's like so much going on, especially on the Jupiter side, which is also like part of some criticism in the space. But yeah, we are in touch with those teams, so hopefully we can bring them on the show. Yeah, very good idea. Thanks a lot.
Oh, thank you. Happy to participate here today.
Really appreciate it. All right, that wraps up this week's episode of Internet Capital Markets. A huge thank you to Felipe for joining us today. If you enjoyed today's discussion, make sure to subscribe, rate, and share the show. It helps us to bring more conversations with the people shaping the future of on-chain finance. This is Internet Capital Markets. Join us next week as we continue exploring how technology, capital, and human creativity converge to build the financial systems of tomorrow. Until then, stay curious, stay connected, and keep building the future of finance. Bye-bye.